Hello everyone, Larry Lavrentich for Ichimoku.co and ForexTrading.tv with a daily analysis of the Aussie dollar US dollar FX for the trading day ending Wednesday, November 27th, 2013. Now the candle we're analysing here is the second last candle on the chart, and the final candle here is the current candle that's developing at the moment. But looking at that final candle, a fairly bearish trading day today, with a black body candle, and extending the size of the black body from the previous day's trading suggests that the sellers have not only continued the downside momentum in net terms, but they've actually increased that momentum. Looking at the position of the close within the range, the sellers have closed down between the midpoint level and the lows, suggesting that they've closed with control of this market, and it does suggest that there is potential for the market to trade lower. Now, having said that, however, if you recall, I identified this area here in this rectangle as an area of previous potential support and resistance, and here we've seen the market trade down into the area. For the previous day's trading to today, we saw price action rejected from that area. We've traded down to there and trading down almost to the bottom of that zone. We are now seeing price rejection from that area and above that zone based on the rectangle that I've drawn. So now it suggests that the area has held as an area of support. We really do need to watch the bottom barrier of that area, which is at 90, roughly about 90.5. But looking at how this market's reacted with this large white body candle at the moment, the buyers are coming back into this market quite strongly, and it's very much what you'd expect. If we look at the trading for the last 5 or 6 trading days, all black body candles, a couple of spinning top type candles, and then the sellers coming back into the market. So it really is time that the sellers basically relaxed, and that's how markets work. When you get this very strong activity, you tend to get either a reversal or congestion, and we are now at something of an extreme. If we look at the distance that the market's trading away from the cloud and from the Kijun-sen, it suggests that the market is looking a little bit overextended. So we're looking for a higher high and a higher low, and at the moment, the way this current candle is developing, we are seeing that occur. Now, if the market does continue to trade to the upside, there is potentially strong resistance around 91.60. A previous level of support in the recent past, and prior to that an important level, and now it may act as an area of resistance to this market, so there's a possibility of the market testing up there and retracing back down. If the market does trade in a bullish manner up through that 91.60 level, we could see the market trading up to about 92.21, and that's been a recent area of support and resistance as well, so that's an important area that we should be watching too. In terms of Ichimoku, well, obviously a bearish market in all 3 time frames. The market's trading below the cloud, below the Kijun-sen and the Tenkan-sen, and the Chikou span is below the corresponding price action. And here's a bit of a clue to the how overextended this market is beginning to look. If we look at where the Chikou span is compared to the previous price action, it's actually a measure of momentum, and the distance is very large, and it's suggesting that this market may be looking a little overextended, and that's what we're seeing at the moment, buyers coming in. Looking at the Kijun-sen, however, that's pointing down fairly sharply, and it's reflecting this solid second time frame downtrend that we're seeing the market in at the moment. And it is suggesting that if the market does bounce, we may see sellers come back into the market. But really what we need to do is watch these zones of resistance to the upside, 91.60, 92.21. But then if the market does come off once again, the bottom of this area, which is about the 90.50 level, and then if we break out down below there, the 90 cent round number level may hold as support as well.